Today's guest is a guy every Aussie knows. Even if you've never met him, you likely know his face. Jim Penman, founder of Jim's Mowing and the Jim's Group, with over 5,000 franchisees across 50 plus divisions. Jim, thanks for coming on.
Be here.
It seems like money was never really the driving force for you. Do you think that's actually made you a better businessman than if
Yes.
you were obsessed with money?
Yeah, I definitely do. I never really intended to become wealthy at all. I was meant to be an academic. I did a PhD in the 1970s, early 80s, trying to
Yeah.
work out the reason for the rise and fall of civilization. And the only reason I went into business was because my academic career was going nowhere. I couldn't get people to take my ideas seriously. So I needed to eventually be able to fund a research institute to take it further. So yeah, it was never the prime motivation. Even these days, I give away about 90% of my income, so it's not really a big thing for me.
What's your overall relationship been like with money?
It's useful. It's a useful servant, a bad master. Collecting money for its own sake is a terrible idea. But the interesting thing is that so many of the really good decisions that I've made were made because I didn't put the money first. I'll give you one
Mm,
clear example. When I started off as a franchisee in 1989, I was up against a much bigger competitor. They had 250 franchisees. They were interstate. They were much better established. And I was, in a sense, trying to compete with them. But one of the things they did that I didn't like is they accepted anybody. Now, I've been in the business of building up and selling lawn mowing runs for a while, and I knew quite well that if somebody didn't have a good attitude towards customer service, they would tend to fail. So I had a policy right from the beginning that said, I'm going to try everybody. I'm going to trial them. I'm going to look at them. I'm going to interview them. I'm going to put them out on the road. If I don't like them, if I don't think they're good at what they're going to do, I won't accept them. And that was totally against what everybody else was doing. I mean, I spoke to a guy who used to sell for Johnny King, which is a American commercial cleaning franchise, and asked him what their criteria was, and he said $50,000 on a pulse. It's the same thing with the head of VIP, Bill Viss. I spoke to him about it. I said, "What about selection?" He said, "It's not up to me to select." So I had this policy from the beginning. I wasn't going to sell a franchise to anybody that I wasn't clearly confident of. Now, I'm sometimes wrong still, but that was the policy. My assumption was that because of this policy, I would never grow that much. In fact, when somebody asked me at the beginning how many franchisees I might have one day, I said, look, if it really goes well, maybe one day 100. I didn't even expect to be as big as the person I was competing against. But that was an ethical reason. That was just simply, I don't care enough about money to put a person into a business where I think they'll fail. Now, as it happened, that was a spectacularly good business decision. And one of the reasons was this: when I started selling my franchises, I was running it from like my basement. These guys had a fancy office in South Melbourne, and they come to me and basically say, "Well, why would I buy it from you? You're an unknown person running a business from your basement. These guys are interstate. They're so well established. They got all this stuff that you haven't got." And I said, "Okay, well, there's a few differences, but here's a list of my franchisees with their phone numbers. Now I want you to go and get the list from the other guy with their phone numbers, and I want you to ring people and ask them." That simple statement killed anything. Because first of all, I knew that I was being a bit precious. I knew they wouldn't give them the list. They give them their area managers. They wouldn't give them the ordinary guys. I would give them everybody. And when anybody rang my guys, they say, "Jim is great. System is good. Looks after me well. I'm doing well." Most great majority did anyway. So that was what happened. It was an ethical decision, and I could name many many cases like that. Just recently, I can tell you, I made a decision which my CFO thought was outrageous. I'm in good health. I'm going to be around for another
yeah.
years or so, based on what Google says about my life expectancy. But I'm very concerned what happens to my franchisees after I'm no longer around to protect them. And I'm
Mm,
concerned that some greedy vulture company, like, what do you call it? The ones that took over people like Brumbies, what are they called? There's been big exposés.
private equity firms.
Yeah. There's some horrible companies that come in, they grab hold of a brand, they rip off the franchisee, they
Yeah.
change the thing, they
Yeah.
make them buy stuff at double the cost. I don't know how that to happen. And I was very concerned it happened. So what I did is put a clause in my contract starting last year, which said that the majority share of Jim's Group can never be sold without the written consent of a majority of franchisees. Now, my franchisee contracts are 20 years. So for 20 years after I've gone, nobody can sell the company. Now,
Wow.
my CFO said that's going to dramatically cut the value of your company. And I said,
Yeah.
look, because I don't intend to sell it. I'm blown if anybody's going to come and sell it and rip my people off. Not only that, but I'm setting up a structure, which means that when I'm no longer around at the treatment, there's going to be a board of directors, and my franchisees get to elect somebody to go on that board to protect their
Yeah.
interests.
Wow. Interesting.
Yes, that's a very non-financial way of looking at things.
Nah, not money motivated at all, it seems.
But look, but I do it okay. My company makes about 10 million a year. I'm not doing too bad. But
Yeah.
even if the majority gets given away, as I said,
Yeah, that's interesting. What do you give it away to?
my research foundation. Foundation, we're just looking at ways to improve character, to help people with problems like drug addiction, alcoholism, certain forms
Yeah.
of depression, those kind of things, and also to do with the declining birth rate and in deaths of despair and suicide and so forth. So I've got a line from my research which deals with that. So that's what I'm putting my money
Yeah.
into.
Well, that was always the goal for you, wasn't it? Was to fund something for the
Yeah,
research, like create the business to fund the research.
I've got a great research team headed. It's at La Trobe University. We may be expanding some into China as well. We've got some great
Yeah.
researchers. We're getting some very exciting results. We're actually testing
Awesome.
drugs already.
Beautiful. So looking back, you nearly sold the business a few times. Once was to clear some debts from a holiday resort. Another, you had a buy ready to go. What stopped you at those last moments?
It was very tough in the beginning, and also I didn't really see the potential. This is in the very early days, and I had lots of problems with my first divorce and so forth, and
Yeah.
all kinds of things like that. So I was under a lot of pressure. I just didn't see the potential. I think more than anything, well, the big thing that really stuck me to it was my franchisees. They basically, when
Mm.
they heard that I was talking about selling, they said, "Don't do it. We want you to look after us. We don't want you to go."
Yeah.
That's kind of more than anything that really was the point. And then after a while, I began to see the real potential, and never was a question. And there certainly isn't now. It hasn't been for 20 years. But right in the beginning, it was very tough, and it was quite close. And sometimes with all the pressures on me, yeah, I did feel tempted to go into something else.
Yeah. As a financial advisor, I always get clients tossing up between whether they should give their kids money or not. You've got a few kids, you've got a lot of wealth. What's your take on giving them money?
My kids have always grown up lean. My younger
Yeah.
kids sort of theoretically at least know that we're quite rich, but they said there's nothing in the lifestyle. you know, their scruffy old dad buys his shoes and his pants from Kmart, and until very recently I never owned a new car in my life until just 3 years ago, and I wanted to go electric. I just live simply. I am very,
Yeah.
very simple. I turn the lights out. So they've grown up understanding they're never going to have an easy ride. You want money, you work for it. Okay. They're all
Yeah.
workers, they're all savers. So I think it's destructive of kids. The only
Yeah.
thing I do, and there's a problem in our society, is that our stupid, ridiculous zoning laws have pushed up the price of property unreasonably. It's
Mm.
at least double what it should be. And that's, you can see that compared to a place like Texas, Houston, Texas, where they've got limited zoning laws and
Yeah.
plus half what they are now. So what I do is I help my kids when they want to have children. I help them to buy a house. There's a set amount, and there's a set amount also, a small amount with each child, just to help them with the things. So if they don't have children, they get nothing basically. But if they want to have kids, they want to buy a house to get settled, I'll help them. But that's it. And I
Yeah.
also pay for the medical private health insurance because one of my daughters-in-law went to a public hospital and almost died from blood loss. So it just freaked me out. So
Wow.
now I pay for
Yeah.
so they can all have children in private hospitals. But that's kind of like about the limit on it.
Yeah. Australia's it's definitely gotten tougher for young people. I think property, the market's expensive, government regulations tight on business. If you're a young person with limited savings, where do you want to see them putting money?
Obviously, property is one thing. Now, even if you haven't got much money, you can always go to regional centres. People get fixed in the idea you've got to live in where you buy, which is obviously
Yeah.
ideal. But if you can't afford to because you're in the big city, you can go out and buy somewhere in a regional centre. There's
Yeah.
affordable houses with reasonably high rate of return with that. The first property, I did actually look investing in early days. I did buy one property, and that was in Hobart. And that was
Oh yeah.
a 16% rate of return in those days. I didn't hang on
Yeah.
to it for various reasons, and I've never invested since then. But there are possibilities in the property market. In general, what I would suggest is an index fund. You just go and buy the index. Now, whichever index, it doesn't matter. You can buy American,
Yeah.
Australian, whatever. Just buy index funds. Ultra, ultra low. That is the best kind of thing. One thing I would say to people, do not try and do your own investing. Do not
Mm.
get into trying to beat the share market. You will lose. That's
Not for
a
him.
mug's game. You cannot succeed
Yeah.
a retail investor unless you're incredibly lucky. You're better off going to a casino and betting it all on black. Honestly, it's a
100%.
terrible idea. Things like crypto, those kinds of schemes, basically massive frauds, buying stuff on the basis somebody's going to pay more. Terrible idea. Don't touch
Yeah.
anything at all like that. So I'd say property, index funds. Having said that, of course, the absolute best way to spend your money, if you can, if you've got that, is in a business that you put your own sweat equity in. Because
Yeah.
more than anything else, that's where you can really do well. And a very limited amount of money can actually go a long way. Like someone like Dan Carroll, who's a high school dropout, had bought a Mowing franchise from us a few years ago. Now that was like $25,000, a lot of money to him. He's now a multimillionaire. And there's a lot of cases like that. So if you get a good business, and you've got not everybody does, by the way, some people shouldn't be in business, but if you
Yeah.
buy a good business and you really work on it, that's the absolute best. So instead of getting 5% or 6% per annum, you can get 200% per annum, 300% per annum.
I guess there's no cap on business. With property and an index fund, there's a cap. It's usually 10%. Property might be 6% leveraged, but with business, you can put $1 back in, you can get $10 back.
But the people have a problem with greed. I'm reading a talking book about the crypto industry and just the massive amount of fraud. It's basically
Yeah.
a thing where these whales, these big players, rip off ordinary consumers. They're greedy. They see these big, Bitcoin's gone up by, it's doubled over the past. I'm going to buy some of that stuff because then it'll go up again. But sometimes it happens. Most often it doesn't. But people should
Yeah.
stay away from that. And there's so much fraud going on. Very, very careful. If you read Warren Buffett and Charlie Munger, those kind of people too, that's what they'll say. If you don't know what you're doing, buy a
Index fund.
index fund.
Yeah. He talks about your circle of competence. So invest in what you know in. And it gets, the more you don't know what you're investing in, the higher the chance you're going to lose money.
And that even
Is
applies to someone like myself, where I've made the mistake is I'm going into things I don't really understand. So I've tried
Yeah.
a lot of different businesses like a computer shop, mower shop, trade exchanges. And at one time I was terrible at that, trying to factory to build fiberglass trailers. I mean, I could keep on going. Tourist
Yeah.
development, all kinds of things, but they've all lost money. The only
Yeah.
thing that I've succeeded at is the thing that I know, because I know very well, I understand lawn mowing contracting. And when you understand that, it's not that different from cleaning or anything else. So I'm good at what I know. If I stick to that and improve on that, I tend to do well. But even myself, and Buffett, Munger said the same thing. Well, Munger's dead now, but it's circle of competence. So
Yeah.
Buffett famously didn't invest in tech because he didn't understand it. He understands Coca-Cola, he understands insurance, he understands those things. But this is the guy who's one of the most brilliantly successful investors of all time. And he says, I don't understand tech. So
Yeah.
let's face it, less than mortals like us, if we don't know something. But then if we do know it, and this is another kind of example, you get a company like Yates, which is a garden supplies company. Some years ago, they decided to go into the business of franchising gardening businesses. And they pinched what they thought was a couple of my executives, one of which was about to get fired, so it wasn't a great choice. But they did so badly, they lost so much money that it tanked their share price. They didn't understand what they were doing. They weren't familiar with the basics of it. They knew about garden supplies, but they didn't know about how you make a money as a lawn mowing contractor.
Yeah. So how do you choose what industry next to go in? Are you sitting down doing the research? Have you got a team behind you? What's the process there?
Yeah, a lot less systematic than that. And what basically happens is that somebody comes to me and says, I'd be interested in franchising this. So I look at various things. Okay, first of all, I look at the hourly rate. If you can't see $70 an hour, like somebody came to me the other week with babysitting, and I said, you can't make $70 an hour to baby. I'm not going to touch it. Because 70 bucks an hour means you've got a sort of income of 100 grand plus a year. That's the kind of level we think
Yeah.
is reasonable. Okay. So it has to be a decent hourly rate. We want something that's fairly scalable. There's no use having a business with 5 franchises. And the reason is because our franchise system is, I'm not saying it's incredibly generous, but we don't have big margins.
Yeah.
We typically take our actual clearing profit on the business about 1%. So there's fairly
Yeah.
narrow margins. It works if you have a number of
Mm.
franchisees. Like if you've got 20
Yeah.
franchisees, that's a good one. So it has to be something that you can do in bulk. Ideally, it's something that you can train somebody in. Now, we do things like mobile mechanics, electrical, plumbing, but they're very difficult because they require prior experience. So ideally, not to it. And then you look at the ingoing costs and what's involved and the training and everything else. So but most of all, what we look at is the person behind it. Now, just to give you an example, on Monday this week, somebody contacted me about a business which is to do with recharging, and this is a really, really great business because they showed me the economics. They showed me what you would buy. They showed me the hourly rates. They showed me how much you charge people. We looked at the market for it, and they were already involved in certain aspects of it, and the fact that it's driving. That's a brilliant idea. I love it. So what I'm doing this month is I'm putting out a notice in my franchisee, because what they're a factory that makes these things, but they don't actually, and they do run them to some extent. But what we need is somebody to run the contracting side. So I'm putting out a notice to all my franchises and franchisors, appealing for internal entrepreneurs who wants to run this. Requires very little training. To my mind, it's a spectacularly good potential business. Scalable, high hourly rates. And another good thing about it too, from our point of view, is it's not particularly physically arduous. So we have a lot of franchisees who do things like fencing and mowing, and they get to their 50s and
Yeah.
they find it too hard. So we say, okay, here's a business. You can use your business now, some personal skills, and make very good money. That's just an example that happened this week. Whether it'll come to anything, I don't know. I've also asked them to find out who they know. So who's going to drive this thing? Who's going to do the training? Who's going to be the franchisor? Who's going to support them? Who's going to sell? Who's going to run the meetings? Who's going to look after it? To find the right person. But it's a brilliant business.
Yeah. Yeah. What are you screening for with these people? Are you doing like a character test? What's the traits you're looking for?
Well, a lot of people who do it, probably mostly they come internally. So what we look
Yeah.
at is their success. I had somebody appealing for a franchisor role, and he's only turning over like 100 grand a year, fairly new operator. I said, listen, you're just not successful enough. You don't. If you're turning over 5 grand a week, we're talking about that kind of thing. I'd look for very good standards of customer service. We have a rating system, so out of a total of 5, you need to be like 4.7, 4.8 and above,
Okay.
which is the
Yeah.
great majority of clients happy. And ideally, somebody who's been involved in training or looking after franchisees who's shown some sort of pastoral caring coaching role. That would be perfect. So put those together. They're the main things. Now, from outside of this particular guy I was speaking to, they had a successful company already, and they were doing this thing on a scale mostly for industrial sites. So he knew what he was talking about. He was right in the industry. He wasn't the person to do it, but they'd have very good support for whoever did do it.
All this being said, do you think Australia is a good place to start a business?
Yeah, it is. It's very good.
Yeah.
I mean, the government is appalling. We have regulations going by the day. They're just shocking. But I have to say, for a company like us, I employ internal lawyers. So all this, every time they change the rules, but they're always doing. We have internal
Yeah.
process. So it probably benefits us more. But anyway, the stupidity of what's going on is just lunatic. Like the franchising code is a good example. There's this massive, massive document. Now, I have asked hundreds and hundreds of franchisees about the disclosure document. One person ever has read it. But to actually keep it up to date and put everything in and all the bureaucratic and the legalese and the masses and masses of fine print, you have to do it because the government says. But it's so stupid and so senseless, and it just is an invitation to rip people off. It's an awful system. So we've got a terrible, terrible government, and it's getting worse, particularly, I might say, in Victoria, which is the worst state in the country. However,
Yeah.
having said that, we are an incredibly rich, lazy society. So anybody who's got a bit of enterprise and gets out there
Yeah.
and doesn't mind doing work, especially physical work to start with, that's really advantageous. You can do incredibly well. You don't have to be some genius. I'm certainly not.
I say that because the stats of millionaires leaving Australia has increased dramatically. Like a lot of rich people are just getting out of Australia, like they're moving countries. Obviously the tax rate's high. There's all these different types of taxes. There's just a lot of incentive to move.
Taxation is absurd. We need to. I'm not in favour of lower taxes overall, but they still don't spend it very well. I mean, our government
Yeah.
bureaucracies, you could cut them by at least half. They were efficiently run. You cut them by half to two-thirds, and put
Mm,
billions of dollars into people's pockets, including those who really need it. There's so many things we could do. We could lower the price of housing if we're going to afford houses, affordable rents. We've got shocking
yeah.
government, and it's getting worse and worse and worse every day. But having said that, we're a very rich society. And people come in here. I've got franchisees who come here with nothing. They're
Yeah.
immigrants, don't have perfect English, but they work hard and they look after people and they listen and they learn and they are absolutely brilliant people and they do really well and they can get themselves established. It's not that difficult because you're not competing against, like if you're going into something like tech, you're competing against the most brilliant people on
Mm,
the planet, or
yeah.
you want to build cars or something like that. That's astronomical stuff. But if you want to go out there as a cleaner or a gardener or something like, you are not competing against the creme de la creme. You're competing against people who are, on the whole, very ordinary at what they do. Now, I have a lot of
Yeah.
respect for independents who succeed because I know how hard it is. 90 to 95% will fail in their first year. So I'm not trying to knock them. But at the same
Mm,
time, levels of customer service that people tend to give are just awful.
yeah.
They really are. We have a system called Busy, but we have like 200,000 plus unserviced leads over the past year. So we have a business that sells that to independent. And we have that, we don't sell all of them, but at least it's better than just saying no to the customers all the time. But the problem we
Yeah.
have is that it's very, very hard to get people to give good service to customers, even though we warn them and we train them and we follow them up and we use surveys. Even so, we end up kicking a lot of them out, just not good enough because they just don't look after customers well. So if you go out into a business and you look after your customers well, amazingly easy. One of my daughters and her partner have gone into just done Jim's removals, and
Yeah.
they've got a 5.0 rating, and they're doing well. Just about they're going just over a year and about to buy their third truck. I mean, they're a great pair, but they're really passionate about customer service, and they just and they're always looking at ways to improve. Danny's writing this program to do to run the whole thing more efficiently, even showing how to stack a truck effectively. And this is learn the business from the inside and absolutely brilliant. Now, these kids are like 21, 22 years old. So but I can't imagine where they'll be in another 10, 20 years, but a long way ahead. But it's not so
Yeah.
difficult. You just have to be focused on your customers and say, how can I improve? How can I do this better?
Mm,
Keep on trying. It's amazing. I know personally know at least 20 franchisees who are turning out more than $1 million a year, and I'm sure there's a lot more.
yeah. Wow. Just looking back through your story, how do you weigh up investing back into the business? Are you investing everything back into the business? Are you taking profits and investing elsewhere? Are you diversifying?
Like I said, the money I get out of the business, most of it goes into my research.
Yeah.
As far as what I effectively do though is I do invest back in the business. Like at the
Yeah.
moment, we're spending several $1 million a year on software development. We've got
Yeah.
this program called Jim,
AI.
which is for franchisees, and it's
Yeah.
just got so many great features, and it's just being rolled out, and it's going to get better and better and better. That kind of stuff. We're rewriting all of our programs to make them newer platforms and more efficient. We're talking several $1 million a year just on software development alone, and then the support that goes into it. So also, I do things like we have great opportunities internally. Like we have a thing called a regional franchise, which is a very
Mm,
lucrative business. What we've been doing is actually buying back the rights to regional franchises and then putting people in place with a sort of profit sharing for a basis. That kind of business returns about 22% per annum. So
yeah.
it's high plus hopefully capital gains. So
Yeah.
there's a lot of internal stuff that we can do that improves our bottom line. And of course, we're growing still. We'll be probably hit 6,000 next year sometime.
What policies, taxes, red tape do you think makes it the most hard for Australians to get ahead? For example, me personally, payroll tax doesn't make any sense to me. we're getting taxed to hire people, create jobs. That to me has never made sense.
Yes, yeah. Look, nobody wants to pay tax. If you ask everybody what they want, don't want to pay any tax at all, and they want masses of benefits. You can't do that.
Yeah.
But there are certain forms of tax that are particularly evil. One of them is, as you say, payroll tax. You shouldn't discourage employers from employing people. It's a really bad thing to do. Another really bad tax is stamp duty on real estate. Because what that means is that you make it really difficult for a person to move. Now, if you've got the potential for a job that's good for you and good for the economy, but you've got to move to the other side of the city or a different state, you've got to sell your house and buy another one. But the government makes it so difficult and expensive. You're more likely to stay put. You make less money. The economy benefits less. Now,
Yeah.
so there are a couple of very bad taxes. What's a good tax? Okay, good example of that would be a congestion tax. You actually tax people moving on roads that are log jammed. That's actually good because it raises money, but it also gets the flow of traffic going. So people who do drive, you have parking, smart parking meters, which actually charge a lot more parking on the side of the road, which also has the benefit that it allows for those who really need to park briefly, they can find a parking spot because you arrange it, but you raise a lot more money. Now that's small examples. Carbon tax is a good tax too. All this stupid business about pumping more and more subsidies into things is just lunatic. Carbon taxes make sense. If you want to actually reduce greenhouse emissions, which I think we should to some extent, then I think carbon taxes make sense. It's an efficient way to do it. But the actual best kind of tax is a land tax, which is a tax on the unimproved property of the land. And if you look at a magazine like The Economist, which I read regularly, it's a wonderful magazine, but by far the best in the world about these kinds of areas. If you look, then what they suggest is you have a land tax which is on the unimproved value of the land, and you make it high. Now, what that then does is it pushes property into the hands of those who are going to use it best. It's because it's not a tax on the value of the property, it's the land itself. So if you've got a very big site, like for example, what the supermarkets do, they land bank. They buy up a whole lot of land and they sit on it. Nobody else can use it. And they do that because they don't want the low cost people like the Aldis and coming on and cutting their prices because they like to keep the groceries high. So that kind of greedy, speculative thing, I mean, they do it because it's in their interest. We make that possible by having a very limited land tax. The land taxes should be a lot higher. Now, if you had hefty land tax, and I mean a really good land tax, you could bring other taxes way, way down. Income taxes too. That's a nasty one. And the great thing about a land tax is it's heavily progressive. You can even give a discount for those at the bottom level. So you can actually say, okay, unless you've got value of land worth over so much per person, you don't pay it, or you only pay on the excess. So it means people who've got buying their big mansions sitting on them, they're paying a fortune. Well, why shouldn't they? Because let's face it, taxing wealth is a problem because they can go. Taxing companies is a problem because you can put your companies overseas. Well, we don't do that, but people can. But you can't move your property out of Australia and put it in Nauru or the Cayman Islands. You can't. It's stuck there. So it's a way of pushing property into the hands of those who can best use it. At the same time, it's progressive. And if you combine that with relaxing of zoning laws, you would actually have a tremendous impact in raising the standard of living for ordinary Australians because the price of rents have come down, the price of property has come down because everyone wants to subdivide their land. I'm not going to sit on a quarter acre of land because it's too expensive, even though you want to live in a plot. Well, I'm not going to pay this much money. I'm not going to pay, $100,000 a year for this. So let's work with the neighbours and let's put terrace houses in. So instead of one person living, we can have 5 families living close to transport, close to the city. That's a positive tax.
Looking back in your career, if you could pinpoint one key trait behind your success, what would it be?
I always say there's 2 things. First of all, I am emotionally driven by customer service. It's not a rational thing. I do very peculiar things. For example, every single franchise, my primary customer is actually my franchisees. So every single franchisee, 5,500 have my direct phone number, email address, and they are
Yeah.
encouraged and promoted to contact me anytime. I want to know
Yeah.
what's going on. I want to be able to help them. I'm not sure that's particularly rational, but I'm very driven by that. I've also got a policy that if any customer has an issue which is not sorted out properly the first time, it gets sent to me directly by email and I sort it out.
Yeah.
So on a daily basis, I'm talking to franchisees, I'm talking to customers. Well, no, I'm contacting customers. So to me, it's a very emotional thing. It's not rational. It's not that I think if I do this, I'll make more money. It's just think I can't stand people being let down. So that's one thing. And that not rational, but an emotional attitude towards your primary customers, your stakeholders.
Mm.
And the other thing is an attitude that looks at everything you do and says, how can I do it better? How can I improve?
Mm.
That is something that I am obsessional about. I'm thinking about it every day. And I'm talking about every day. I talk about weekends, public holidays, Christmas, doesn't matter what I'm doing. I really don't take much for holidays. I'm not a holiday person. But I'm out
Yeah.
gardening. I'm thinking about this. I'm just obsessively thinking, and I'm reading, and I'm talking, and I'm just saying, how can we improve? I was talking with my wife this morning because she's involved in the business too, and we're just going through a whole stack of different ideas to things that we're doing, things to do with the Jimbo, to do with the customer app, to do with improving efficiency, getting more growth from the franchise network, just lots of things going on all the time.
Yeah.
And I'm very endlessly self-critical. How can I improve? How can I do better? Where's my failings? What can I do?
How do you weigh up chasing those ideas and exploring them versus just doing the same thing that's working?
There's no there's no question doing the same thing, but we're doing the same thing, but we want to do it better. Look, a customer app, for example. Now we hopefully have that done by January. And then we're going to work out how to get it out there. This is part of the issue. But a
Yeah.
customer app is great because what it means is that we get a person to put it on their phone. It's got all the details in it. So then if they want
Yeah.
to book a service, all they do is the app, yeah, dog wash, confirming your address, bang, yes,
Mm.
I want that. Okay, somebody will be bringing you back in 2 hours. Bang, 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 like that. It's so quick. If you make it easy, more people will call us. Now, another thing that's coming fairly soon, I hope in the next couple of months, I don't know if this is going to work. I hope it will. But we're actually going to have a situation where, with this new Jimbo, this app that we're rolling out, we're going to be able to let the system look into a franchisee's diary if they wish. And they might
Yeah.
say, look, I've got half an hour spare today. So when a customer rings up, instead of being said somebody ring you back in 2 hours, the
Yeah.
system will check in and say, well, actually, he's going to be in your area. And they might say it's the client this afternoon. So then the message goes back to the client. Instead of when they ring up and they say, I want to book you my service and so forth. And you say, look, would you be around between 2 and 4 this afternoon? So you book an appointment for the franchisee. Now that's very good from a number of points of view. First of all, it's really good because the client's got somebody going there. The franchisee doesn't have to call back, but they can change the appointment if they wish, but then they have to
Yeah.
contact the client. And then we have a system that actually confirms down the track whether they actually turn up. So we have a bit of a customer service issue to it. Now, I just give that an example of something that probably happen in the next month or two, but that
Yeah.
would be dramatic. Now, if we can do that, we could probably difficult to investigate, but we'd probably increase the conversion rate by at least 10%, which would mean, hundreds of thousands of more jobs per year, better reputation with the public. And if we can drive down the level of complaints, then using these apps and these kinds of technology. So we're not doing anything different. We're just trying to do the same
Yeah.
thing better.
Yeah. You're refining the processes and doing things better rather than, yeah, I guess venturing out to heaps of different things that may be distracting.
Well, that's the thing I shouldn't do. Go into things like building trailers, get
Yeah.
somebody else to do the things. And in fact, one of the things
Yeah.
that we're doing ourselves, we were running certain regional franchises ourselves and certain divisions. We're actually trying very hard to outsource that. We're finding the best people, putting them on contracts and actually moving out that kind of responsibility. So we do less and less, but we do the
Yeah.
things we do and we focus on doing them very, very well.
What advice would you have for someone who feels behind in their 30s?
Oh my goodness. I can remember when I was 35, thinking my life is half over because I thought nobody's going to live past 70.
Yeah.
Already, but anyway, and thinking, jeepers, I've achieved nothing. I'm getting nowhere. I was failed my PhD. I was out there pushing a lawnmower around to make a living,
Yeah.
working pretty long hours. I'm thinking, jeepers, you're not getting anywhere. No, that's 35. So
Yeah.
I'd say you got plenty of time. Plenty of time. 30s is young. Even 50s is.
Mm.
Ray Kroc didn't come across McDonald's brothers until he was in his 57.
Yeah. Yeah.
He was okay, but he was going around selling multi-spool mix masters. That was his job and his business. He was making money from that. That's all. He was a traveling
Yeah.
salesperson. And then, well, McDonald's is a brilliant company and terrible food, but I really admire them. But that's late 50s. And you look at people like Buffett and Munger that I talked about before. I mean, these are brilliant guys. They're still going strong.
Yeah.
Buffett
Yeah.
made more money after the age of 60 by far than he ever did beforehand. And what's the interesting thing too, if you have a look at one of the things that Berkshire Hathaway does is they buy successful companies with great managers. And there's a book that unfortunately I lost it. I lent it out to somebody called the Berkshire CEOs, which talked
Yeah.
about these great, brilliant managers that they had bought their business with the management. And the most striking features, and most of them were way of retirement age. One of them was over 100.
Mm.
So this very idea that somehow you have to be young I don't agree.
Yeah.
I've learnt so much compared with what I knew when I was a mere spring chicken of 63 10 years ago. That
Yeah.
was what an idiot. I didn't know a thing back in those days. I look back on my younger 73. I was like, oh, come on, Jim, what were you playing at? Why did you do that stupid thing there? Why couldn't you be sensible? It just takes a bit of age to learn stuff.
Yeah. All right. So for someone in that 30 age bracket and they're maybe working a job they don't really like, they want to get into business. What's your advice around, jumping straight in? Should they taper it off, start a side business? What's your advice around that?
Okay, look, first of all, there's only one kind of business I really understand that well, which is the services business. And
Yeah.
so I'm very biased.
Yeah.
It's been great for me, but it's got a big advantage in terms of the fact that you've got absolutely minimal investment and incredible upside. I would say if you're interested in doing something like retail, that's a different issue I can't really advise on, but I do know that the people I've been in that sort of thing, they spent a lot of money to get often a very ordinary income. So I like the trades business. Now, if you want to go into business, there's kind of two ways of talking about a trade business. There's two ways to do it. The first way is what I did. You start part-time. And that's really important. So you can start off at the weekends, just doing something, learn the business part-time, hold yourself in the job. Now, I've got a friend who's actually in business, finance broker, and
Yeah.
he's working during the week. And he's got a sales job. He's building this up on the side, and he thinks in a few months he'll be ready to go. But that's a sensible way to go. You start at part time, you learn what you're doing. It's a learning. It's a matter of getting customers in place, but even more than that, learning how to do it, what to do. The other way, of course, is to buy a franchise. That is, if you're going to go full time, that's probably a much better option. The simple fact is, statistics show that if you go into your own business, like a trade
Yeah.
business, 90 to 95% failure in the first year. Now, we don't have 100% success, but our failure rate's about 12%. In other words, people who
Yeah.
leave the first year about 12%. So it's not zero. But
Yeah.
in that case, what you've got is a number of things. You've got training, you've got clients, you've got coaching, you've got meetings where you meet other people. You've got a whole system that's designed to help you to succeed. It doesn't guarantee success at all. And a lot of things can go wrong. But it takes away a lot of the risk. So I'd say one of those two ways is the best way to do it if you can. One thing I would say to anybody is go into a boring, boring, boring business.
Yes.
I was
I like
talking
that.
to my one of my daughters. She's about to get engaged. This is an amazing young man who's working as a management consultant, and he's interested in going out into business for himself one day. And he says, Jim, boring businesses are the best. You know, he was mentioning things
Yeah.
like dry cleaning shops and stuff like that. People get sucked in by the glamour, you know, the
Yeah.
things like high tech and
Yeah. Crypto.
crypto and airlines if you got enough money and YouTube
Yeah.
influencer and becoming a film star and all those things have got really appealing, emotionally appealing. Even running a cafe to some extent, it seems like a great lifestyle. It's just a grind. Go into
Yeah.
business is really boring, boring, boring. Because it isn't actually boring when you're in it. I don't find lawn mowing boring as a business myself. I find it really interesting. But it's a business people think of as boring. So you don't get this massive
Mm.
competition. So in that area, you're not competing against the brightest people in the world. You're competing against other people who aren't particularly good at what they're doing. So it's
Yeah.
much easier to do well. What we find is that people who come from corporate backgrounds, surprising number, we've had lawyers, even a doctor, people high level corporate positions. They come across and they buy a franchise, and they actually tend to do extremely well because they've got that sort of level of ability already. In fact, the best indication of how much money a person makes as a franchisee was how much they made in their previous job. They tend to at least make the same money, if not more.
Yeah. Those boring businesses, I wonder the stats of like what actually last. Like your boring businesses, like your accountants, as you said, dry cleaning, like they were actually last. But there's a lot of like cryptocurrencies and things like that that will they're phases or fads that I guess die out probably a lot quicker as well.
What you do, but you've got to be one of the whales and the fraudsters, and they make money. People
Yeah.
like Bankman Fried and all those guys, they do
Yeah.
quite well for themselves, but the vast majority of people who get in just get ripped off blind. It's a horrible thing that they do. So
Yeah.
if you're a thief with no conscience, by all means start a crypto exchange if you've got the background. But really, I like to do something useful. I wouldn't go into a business I couldn't see value in what I was doing. Like, I
Mm.
know what we do. In our business, we give great service to clients. We do.
Yeah.
We know it's better than other people. That's why we're successful. We also give great service to our franchisees. This is a genuinely valuable business. Crypto is just based on the idea you want to buy it because somebody else will pay more. Well, that's terrible. It's
Yeah.
terrible value.
Speculation.
The only thing
Yeah.
it's useful for really is if you're a criminal, it's a very good way of transferring your ill-gotten guilt. I don't know that's necessarily an uplifting social purpose that I want to support.
That's very fair. Yeah, I agree with that actually. I stay far away from cryptocurrencies, investing anything in my clients.
I would never
As you
ever
said, it's
I would never ever buy anything that I couldn't see real value in the company.
yeah.
It's got to be doing
Well, that's right.
of worth and of value. That's the basic. That would cover a lot of different things, but
Yeah,
it's things will get
100%.
locked up for sure.
Well, yeah, if you think about like property, it's creating rent through the income and
Yeah,
someone's living in there, and a business like a share, it's getting dividends, the company's growing, it has earnings. Cryptocurrency, as you said, it's speculation, like you're just buying it off the person who's willing to sell it at a lower price.
yeah, and mostly what happens in that case is that you're the one that lose because the people who
Yeah,
make money in those things are the big people, the manipulators.
yeah, that's it. Awesome. I got a final question for you. You can have a minute to think about it as well. What is the best piece of advice you've ever received?
It's My father once told me something very, very useful. He said, "You never bet the farm, never gamble what you can't afford to lose." That's
Yeah,
a particularly good bit of advice. Um, Most of what you'd say is the advice that underpinning my business is not so much from a person; it's from the Bible. It's Jesus washing his disciples' feet. The
yeah,
idea of servant leadership. It's the parable of the talents. Those kind of ideas. I tend to read a lot. I would read a couple of books a week. So I'm
yeah.
always
Wow.
looking for read or listen to it. Not often listen to. Always looking to better ideas, newer ideas. The world is full of good advice. There's a lot of
Mm.
really brilliant books around. Actually, I'd recommend that to anybody rather than look for a particular advice. But obviously, podcasts like this one is a great way of learning too. But there's books
Yeah.
like Seven Habits of Highly Effective People by Stephen Covey.
Mhm.
That's
Yeah.
a wonderful book, or books about like atomic habits, tiny habits, those kinds of books about how
Yeah.
to discipline your lifestyle, those sorts of things too. There's a lot of absolutely brilliant books around. If anybody goes to jimpenman.com.au, which is my website, you'll see a book list there, which is a whole lot of books that I'm recommending to people about lots of topics, a lot to do with happiness, to do with investment, to do all kinds of things, to do with a better life. But yeah, I'd say the best bit of advice you give everybody is do a lot of reading. Always
Yeah.
learn, watching podcasts, books, learn, keep on learning. The more people you learn from, it doesn't matter if it just washes over you all the time.
Mm.
Some things will stick. You might have a book that's you're 5 hours reading and you'll get one ideas, or you'll see a podcast and you'll be listening to it and there's this guy dribbling on about all kinds of things, but then there's one thing that he says or she says that really sticks to you, and then you use that, and then suddenly you've got an extra 1% on your business. You've got to learn and listen all the time.
Yeah, usually that one idea sticks with you for life as well,
You keep on
which is
piling it on,
good.
and you just keep on. The more you read things too, it's not just a matter of hearing an idea; it's hearing it repeatedly. Like one of the things
Mm.
in recent years, my diet's got a lot better. I eat a
Yeah,
lot more vegetables and stuff. It's not one book; it's the fact that I listen to a lot of different books and podcasts and stuff about that kind of topic. And if you do it enough, it sort of sinks in, and you just find yourself eating better. And the same thing
yeah.
with exercise and so forth. So you keep on immersing yourself with good ideas, you will eventually, some of it sticks. It's like living in a community. If you were in a community of people and all your friends were sort of really keen on fitness and health and stuff like that, you tend to move along, wouldn't you? You
Yeah.
tend to become healthy. Well, you can build a virtual community by listening and absorbing the best ideas and the best thinking.
Thanks, Jim. I appreciate you coming on. This was a pleasure.
Good to talk to you.